Welcome to Second Take, the show that focuses on the issues behind the news. Anglo American Platinum has decided to pursue shallow, low-grade reef and delay the exploitation of its higher-grade but more capital-intensive deep shaft options in Rustenburg. Mining Weekly editor Martin Creamer is in the studio to tell us more. Welcome, Martin.
Thanks, Shannon.
Now, what is the main reason for Amplats to pursue this option rather than the higher-grade Merensky reef?
Well, firstly, it's got an opportunity because up to now, Merensky has been the reef of choice. And because it's been the reef of choice, they've left the UG2 or the upper group 2 reef behind. They left it behind because it was lower grade, so they wanted to pursue the higher grade. And now they're deciding that, you know, this is close to surface. It can be accessed at low cost. And they've got more appetite for that than actually spending a lot of money splurging out on deep level mines that take a long time to build. You know, those vertical shafts go on forever as you develop them. And they feel there's no incentive at the moment to invest that sort of money. So they'd rather be cautious now and stay closer to surface. And then it also fits in with their new image. They've been doing their best to try and shed this fat cat image that they had, that their cost of mining was always so high and everybody sort of regarded them as fairly spendthrift, and they were quite cavalier in the past. And under Neville Nicolau in the last 3 years, they've been tightening their belts, and this fits in with that because this is a lower grade reef, and therefore it's you've got to be fit, you've got to be sort of cost-wise, you've got to be fitter and more nimble to get to it, but the capital outlay is not going to be as great, and that's what they want to avoid at the moment.
Now, CEO Neville Nicolau mentions the negative impact of mining lower-grade UG2. What is he referring to?
Yeah, he means that you know, it's tougher to do that. The grade, it's a lower grade ore, so you're like going on a low-fat diet. Yeah, so you need to be, as I said, nimble, quick, and so he feels he has reached that stage. In the last 3 years, you know, he's, if you have a gym comparison, he's had his people in the gym and they've been running on the treadmill, and now they're fit enough to run this race. But the advantage, of course, is that it's closer to surface. If it was deep, I think that would be quite a difficult task. Even though this is going to be difficult, that would be far more difficult. It's shallow, and that's the advantage.
So it's safer too.
It's also safer. The safety aspect is huge these days.
The company still envisages production at the Mogalakwena mine for the next 150 years. Can you tell us more about that?
Yeah, the Mogalakwena mine is a magical mine. I mean, it's as he says, it's a long life mine and it's low cost. I mean, it's unbelievable. It also fits into this new pattern of being shallow or closer to surface. It's not the typical underground mine because it's open pit. And you know, up to now, Anglo Platinum, now called Amplats, by the way, they're emphasizing the Anglo American Platinum, and if you abbreviate it, it becomes Amplats. They've traditionally had underground mines, with the exception of what we used to know as PP Rist, and now it's called Mogalakwena. It's an amazing mine because, you know, it's got a spread of metals and minerals. One of them is nickel, and generally just the, you know, recovering the nickel and selling the nickel virtually covers the total costs. So you virtually, you know, get platinum free, as it were. So it is an amazing mine, and it's got this very long life. And it could even go on for 150 years, as he says. And perhaps if they mine it a bit faster, you know, they can reduce that longevity. But it would still be like a 100-year mine. So it's a remarkable asset. And it fits in with this new pattern of low risk. You know, I think the mining the UG2 is in Rustenburg, by the way. That's where they're mining the UG2, whereas Mogalakwena is in Limpopo. It's a different province altogether. So the one is low risk because it's close to surface, and that's the UG2, and they've got themselves fit to do it. And one could say that with Mogalakwena, there's no risk at all. So that's what he wants to pursue at the moment, because he feels there's no incentive to spend a lot of money. You know, one would see a fantastic dollar price of platinum at the moment, but in a way, gold is taking center stage. You know, it's starting to eclipse the platinum, palladium. I mean, I think gold price appreciated by about 14% to date this year, whereas platinum and palladium, well, platinum particularly has been sort of just hanging in there. I think it only, you could say, it appreciated by about 2%, you know, in the same period. So there has been a time when gold and platinum was coupled. They were virtually on a par price-wise, and then platinum pulled away and then started to look down its nose at gold. You know, it had not only jewelry uses, it had big industrial uses, and you know, gold hasn't got those industrial uses, and it was a metal that everybody was pursuing. But because of the problems in the world, the economic problems, the debt crises in Europe, and the Americans battling to see how they're going to deal with their own debt and the possibility of default, has put gold onto the stage, and the spotlight is on gold, and possibly it's beginning to outshine these platinum. So the investment appetite is not the same as it was for platinum, and at the same time the rand price, the rand is quite strong. So they're saying, look, it's not the time to invest in very deep level Merensky mines that take a long time to develop. It's time to take this opportunity and eat the leftovers, and take the leftovers off the plate, because previous management has gone hammer and tongs for Merensky, and they haven't, in Amplats sense, you know, Lonmin and Impala Platinum, they have gone for UG2 to a great extent. But this now presents an opportunity. Previous management have left them with this opportunity, and they, in Rustenburg, they want to go for the lower grade UG2, and then fitting in will be Mogalakwena, which is anyone's dream, and then lower down the line they'll look at the Eastern Limb in a medium term type of operation and expansion, and then longer term look at the Merensky replacement project, which in the past those Merenskys were top of the queue. Now they've gone to the back of the queue.
Is that what is relating now to their repositioning going forward?
They want to reposition themselves. They've been trying desperately over this 3-year period to change the whole culture of Amplats as it is now, and they feel that they're reaching that point, and if they now invest a lot of money, they will lose out on all the benefits that they've gained. They would rather continue, you know, to keep themselves mean and lean, as always mean and lean as Amplats can be, and rather pursue deep level growth when it's more appropriate, and at the moment, at this point in time, keep their balance sheet strong.
Well, we look forward to hearing more about that. Thank you very much, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.